Good evening, everyone. Nathan here from Be Decentralized, and today I just want to talk a little bit about what's happening out there in the financial markets. You guys have asked me some questions this week. I'm going to try and help answer these things for you and deliver you some of my brain juice and views and thoughts of this week. Obviously, yes, today's video has got a EOS shirt on. I'll sort of just wear this one. It's a Brock Pierce special. It was obviously one that's it's an actual genuine EOS t-shirt. You can't buy them. I got it from an event one day, but I just thought I'd wear this shirt. Obviously, given the fact of what's happening out there with EOS in the current market, just for a bit of a laugh. But yeah, sorry if I'm a little bit puffed. Just locked myself out of the office and I had to try and navigate my way back into the building. Before I get started, obviously, any of the sentiment of what I talk about and the things that I mention of that is licensed and regulated. I'm just a dude with an opinion that likes to buy things, likes to invest in random stuff, and I'm just sharing my own knowledge from what I see out there. So this week I'm just going to talk mainly about, clarifying what I've been talking about with my view of a GFD. What does the GFD stand for? I've coined it myself as a term, which is global financial depression. I believe that we're going to see, financial troubles out there in the marketplace, which would make 1929 and the Great Depression look like the good old days. With it, we've seen the GFC back in 2008. For those of you that don't know my story all that well, obviously, my background has been in property. I'm an investor. I talk about property out there. I've invested in lots of different financial instruments over the years. And in the current market, what I'm seeing out there is, I've used financial instruments in order to make me successful, from leveraging certain ones, and property's been a great vehicle, and it's something that I still actively invest in to this day. However, I see that there is some challenges out there, and when I was fortunate enough at the age of 24 to retire from the workforce in 2009 during the midst of the GFC, and I find that as a fantastic time to actually see a change of wealth from one hand to another. So, getting into it, why is the GFD in my opinion going to happen? If we look at understanding money, money is something that is rarely talked about. You shouldn't talk about it at the dinner table. You guys are probably eating dinner at the moment, but you shouldn't be talking about it at dinner table. But it's something that a lot of people don't have great knowledge. Even if you go to a 12-year indoctrination camp or one of the universities after school and speak to the economy instructor at university or whatever, they'll tell you limited knowledge on it. It's because the actual origins of where money comes from is not really known out there. So if we look back in if we go back to 1024 AD, so the first hyperinflation ever occurred in China, almost 1,000 years ago, and since that hyperinflation occurred, there's literally been over 10,000 fiat currencies, and they've all turned to their intrinsic value of zero. They've all been hyperinflated. Generally, currencies have been lasting for a period of about 45 years on tops. If we look at the current system that we've got, none of us here know our life without the current system that we've got in place. Going back probably about 150 years ago, the system as it is today never existed. I'm not going into biblical stuff and religions and whatnot, but there was a different sort of structure in the way that the world operated. And currently, as we look at humanity, how we're born and the things that we're taught on, etc., etc., we see that we're just taught to use money as a vehicle, and we never get told anything about the interwound workings behind it. So today I want to sort of demyth some of these things and talk about how the financial instruments that support money and the monetary policies out there are actually about to collapse, in my view and my humble opinion. I can see a lot more people are joining in, so as always, not financial advice, I'm not your financial advisor. So getting right in 1971, the currency changed. We remember it being $1. It was always $1 before that, but it changed significantly at that point, and it was where President Nixon went away from the Bretton Woods system and actually hooked us up to the current system being the petrodollar. The petrodollar is in essence making the US dollar a fiat, making US dollar the base currency of the world. And if you notice through revolutions, we had the Industrial Revolution, which started in the early 1900s, mid 1900s, which is obviously when the Federal Reserve in America got established. What we saw happen around the 70s is where stuff got shipped off to China to do. You had all these cheaper products. I remember as a kid, everyone used to say all this cheap shit coming, from China or Japan or wherever, because it was cheaply made and it wasn't as good quality. But in essence, changing the base currency of how the system worked back then, it made it more beneficial for all nations to be able to give it to a lesser sort of financial stable nation and able to get them to do the work and ship the products out to us. But obviously, over the years that have gone since 1971, we've got things that have happened and changed. So a lot of people look at the interest rates and stuff like that. And my personal view, I don't see interest rates ever going up. They will go up. And I think I've made these calls. Actually, I made a call at a Christmas event that I had for my VIP clients in my business that I normally run, obviously external to this. This is all just for fun, guys, sharing knowledge. So, but I actually made the call that we'll see 25 basis point interest rate rises during the course of 2018. And I actually made it last month on a Facebook Live somewhere else that we would see interest rates rise probably before August this year, in my opinion. And it's funny that only probably last week, I think the RBA came out and said it's almost a certainty that that will happen. What will happen after that, I'll get into that in a moment. But in essence, what we've seen since 1981, which is about 10 years into the current cycle, what we've got into the fiat currency that we're using, we saw the dollar has basically declined since then. I don't have a fancy graph or a stats or anything like that here. Go check it out. I always encourage everyone not to trust anything that I say. Go do your own research. If you can get some knowledge and a rabbit hole to go and research, it's good to be able to share the knowledge. So since then, we've seen debt increase globally, and we've seen the cost of money decrease. And we're at a point now, if we look at the current interest rates, obviously just here in Australia, interest rates have not gone up once in the last 8 years since 2010. Since 2008, we've seen interest rates come down 17 times and up, I think it's 5 times they went up. Something to the tune of 7.25% down and up 1.75%. So that has been something that, if you look on a global stage, it's happened throughout the world. Debt becomes irrelevant with inflation, and that's why I like property as a vehicle, because it gets the debt becomes inflated away, and it makes it easier to pay it off. And obviously, you have a cash flow and capital growth on that perspective. But there's all different financial instruments. But looking at the dollar at the moment, there's many different areas which are about to implode. What happened in 2008 wasn't because of certain homes or whatever like that in America. What happened is there was a financial instrument called a CDO, which is basically a derivative where they packaged up home finance. And if you've seen The Big Short, they talk about the cat shit wrapped in dog shit and whatever, and they're basically making bets upon that. And I think from the GFC, there was $7.5 trillion worth of derivatives or CDOs which actually imploded and caused the GFC, caused a lot of people to lose money, and caused a lot of institutions to fold up and close up. What we now have, if you go onto Google and go and research Deutsche Bank, I like sharing that around in the social media, because that is a prime example of an institution which is completely screwed up, in my opinion. They have $75 trillion worth of derivatives on their books. If something was to occur, which the fungibility of the monetary system out there at the moment doesn't allow anything to really happen, there's no movement for any error. if something was to occur, we'd see all the derivatives, basically fall apart. And I think that what we're going to see cause the reckoning for the GFD will probably be something around the bonds, the 10-year US bond, the 3-month LIBOR rate hitting each other, or the fact that, so if we have a 3-month LIBOR rate increasing, and then we have a 10-year US bond treasury rate at 3.2% or above, basically the 3.2% or above, I believe, is unsustainable given the current climate. Since 2008, everyone's sort of made himself hooked up with an IV drip in order to keep the economy afloat. Businesses out there are throwing money into an incinerator in order to, maintain themselves, and they hooked up the cheap credit. If interest rates were to increase and the cost of money was to increase, lots of different areas and markets would be impacted. If we look at the stock markets out there, they're very volatile at the moment. We're seeing big swings on intraday trading. If they were to have such a great swing and hit off some margin calls in one session, we could see a collapse on that front, which would have a flow-on effect to other parts of the marketplace. So in my view, I think there's a lot of risk out there currently in the market. There's little that anyone can do to really stop it. But the end result of what will happen from that is that we'll see a hyperinflation, and a hyperinflation will just mean a rapid pace of inflation. We're seeing things rise every week. People are feeling richer because they're seeing more digits out there, but they're feeling poorer because everything's costing more. Sorry, still getting over the flu. So looking at the actual, the triggers of what is risky out there, I feel that the 3-month LIBOR, the 10-year US Treasury bond rate, is something to really keep a close eye on. I think we're in trouble if it hits over 3.2%. I think that if the LIBOR rate hits the 10-year US Treasuries, it'll suck out liquidity out of the marketplace. And I think that the other thing to consider, and this is actually only about 48 hours away, is that we have had we've had tens of trillions of dollars worth of money printed, and you should question yourself, right? If our government has to go get a loan from somewhere, who has that money to give the loan to, right? They're the questions to be asking yourself. So maybe go and do a bit of research on where money is created, how money happens, etc., to get a bit of a clearer picture on what I'm talking about here. But if we see the sorry, I'm just going to mind blank here. Where was it going? The 3-month LIBOR, if it hits, game over. If the interest rates don't go up, then game over. If they go up too high, it's game over. And what we've always seen is just more money printed. So I expect that we'll see a lot of stimulus coming out to actually save this beast. So certain financial instruments that I use myself will obviously benefit from that. Crypto is something that's very new, very risky. There's no doubt about that. But I think it has a big place in the marketplace moving forward, especially for decentralization. If we look at the centralized organizations that control us, food centrally controlled, our governments are centrally controlled, our education is centrally controlled, our programming is centrally controlled from lots of different things. And what should have happened back in 2008 is for the drain to be pulled out of the bathtub and all the shit to be taken away. However, it didn't, and I believe that we've seen things multiply to a period of probably 100 to 1,000 times worse than what they were at the GFC. But is there something to be scared of? No. Depends whether you just want to be like the rest of the population, which inevitably gets their media from the same places that bring you Sesame Street and Married at First Sight and whatever, or you can actually go and do your own research and educate yourself in how to sort of protect yourself. And looking at some of the things that are going on out there, if you go and look at the property market over the course of the last 5 years, we've seen the front page of newspapers in Australia saying house prices aren't affordable, prices are going up, so on and so forth. But if you look a bit broader than that, you'll see the same front page newspapers are saying house prices are unaffordable, etc. in the US, the UK, Canada, Europe, Philippines. Like the Philippine house price is unaffordable. So, why did this happen? And it all came from printing more money and manipulation of the monetary supply. And it's something that if you can understand how these things work, you can understand how to use them to your benefit. And we're going through a liquidity squeeze. On the 1st of May, what we're going to see, so starting, as I was saying before, and when I got distracted and I lost my train of thought, I was saying that, we've had literally tens of trillions of dollars worth of money being printed over the course of the last decade. And the central banks are trying to, it's been called quantitative easing, where there's been money printed to try and make the markets nice and strong. However, what we're seeing at the moment is quantitative tightening, which is where they're trying to pull out money from the marketplace and obviously repay back some of those debts. Starting with November last year, they committed to pulling out $10 billion a month out of the marketplace. In the marketplace, if you consider $10 billion worth of money being taken out, it's not really that much. $10 billion would not buy much nowadays. But, if you're considering tens of trillions of dollars worth of debt, it's like taking 5 cents out of $1,000. There's really nothing. But as they're doing this, every 3 months, they're increasing it by another 10 billion. So if you notice on the 2nd of February, I reported, and it's on this page, that the stock market was going to take a bit of a hit in the US, the Dow Jones, and it did. And that's because it was it went from $10 billion to $20 billion that month. And at the end of this month, being the next 48 hours, we're going to see that tighten up to $30 billion a month. And to November this year, we're going to see $50 billion a month being sucked out of the marketplace. And when you put it into perspective, it'd be like trying to fill up the ocean and just standing on the side pissing in the ocean, but it's not really going to fill it up. It's going to make no difference. However, if I drained all of my liquid in my body, my skin, everything, it's still not going to do anything, but I'd be dead. And that's sort of what I see happening in the marketplace at the moment, is this liquidity is coming out. If we get to November and they're pulling out $50 billion a month out of the marketplace, what would that equate to? That would equate to the wealth of Bill Gates being removed for 1 month, and then all of everything that he controlled gone, and then the next month it'll be Warren Buffett gone. You can't keep taking the liquidity out of the market when there's so many triggers and landmines that are sitting out there in the marketplace. And they're the sort of things that I'm seeing that I'm being very fearful of. I called it, I would see this being a bit more active at this time of the year between March and May, and currently we're going into May. However, if it doesn't happen right this minute, I don't see how it can really get past the end of the year. And I don't think it's something that a lot of people probably go unaffected by it. But the triggers are out there, the symptoms, the symptoms are there. But what can you do to actually capitalize upon that? And as I said, I think that debt becomes relevant with inflation. If we're seeing something inflate, if you had $1,000 in 2008, you could have bought paddle pops at 80 cents. Now they're $2.50. If you were to buy the paddle pops in 2008, you could have bought yourself 1,200 paddle pops. Today, if you use that $1,000, you'd only be buying $2.50, so you get 400 paddle pops. So you're getting 1/3 of your purchasing power. Your purchasing power is being ripped off you every single day of the week. And I personally think that as we see more printing happening out there, as I said, I think that crypto is very volatile, a very, very volatile instrument, because it's new and there's manipulation, I'm sure, that would happen out there. But in time to come, I think that a lot of the growth that we're seeing is coming from the dollar dying. The dollar is being hyperinflated away. The more debt that's printed, the more money that's physically being able to enter the crypto market or enter into any other sort of market. If we look at gold and silver is stuck. So if we're using contracts to manipulate oil, gold, silver, anything, corn, coffee beans, whatever, those things are being artificially kept at those levels. I personally have a feeling myself that if gold and silver wasn't manipulated via these sort of contracts that the large institutional banks have, that gold could be in the vicinity of 25,000 an ounce, and silver probably about $500 to $700 an ounce. I'm not here to talk about precious metals. I'm not here to talk about any sort of strategy, but it's just my view on my research as to where these things would happen. If we look at some of the banks at the moment, specifically, those banks sort of talk about with the derivative problems, they have on their books the average of about 64,000 contracts per 1 ounce of gold. So that's manipulating the price up, down, and keeping it wherever they want it to be. It pretty much costs the money of what you're paying for these resources and commodities to come out of the ground as to what you're paying for them. So, at a time of crisis, you generally see commodities rise in value, steel, coal seam gas, etc., etc. And I think that's why Australia was quite protected during the GFC. And I think potentially as we go through another one of these, if these commodities go up in value, as I think they will, we could actually possibly see a commodities boom come back to the country, and we could have a mining boom, which would actually insulate us. I think Australia is very, very safe in this environment, but it's what actually comes from that. Most people think that holding your money in the bank is the safest thing to do. We've seen over the period of the last 6 months, lots and lots of things happen out there in the financial markets. We're seeing Royal Commission in the banking industry at the moment. However, what's scarier is if you actually go and look around the world, as I was saying beforehand, front page newspapers and stories out there, you will actually see that most banks around the world are actually having similar sort of thing conducted at the same time. So the ECB has asked Deutsche Bank, that word once again I'm using, to do a scenario of orderly winding down their bank. Why would they do that for? Why would you need to do a simulation of what it would look like and how you'd actually carry it out? Other news this week is, they've got this Deutsche Bank talking about pulling out of Wall Street. They're the largest bank there. Everyone's connected. Every bank's connected to it because of all of these deals that are behind them with derivatives. There's so much stuff there without much room to move, right? If interest rates go up too high, if interest rates went up in Australia from 1.5% to 3.5%, it's only a 1.5% interest rate rise, and a company is using BBSRs, bank bill swap rates. What we're going to see is, obviously their cost of expenses going up, potentially by a third. And adding that into the bottom line of the business, we're going to either have to see them scale backwards, being able to pull out their costs, cut back on cost, etc., like that, etc., and that'll have a negative impact in the economy. So lots and lots of scary things out there. I have made some notes. I've printed out some of your questions that you've asked throughout this week, and I've also made some of my own notes here. So I personally feel like you see a lot of people out there and they're talking about crypto potentially being a scam sort of money and all that sort of stuff. Bitcoin's a scam. You've got all the fudsters, the idiots. I feel sorry for the people that don't get it because they're being left behind because of their own uneducated or their idiocracy by thinking that it's such a bad thing, but they're not questioning. They obey without questioning. You believe that the government's going to. We're at servitude of the institutions, the corporations, and the big companies out there in the world. And doing your own education, you'll be able to see, like throughout history, no fiat currency has ever survived. So they've only survived for about 45 years in a top line. So in my view, if we look at scam money, it would be the dollar that we use because being on the blockchain, if we look at Bitcoin, for example, it is an inflationary currency. Our own personal dollars are deflationary because they're buying less and less every time. If we look at the actual, the ability of it, like people are saying that I think the real win for crypto will be when we see the more printing. The next phase of quantitative easing, I personally think that everything will benefit as it gets inflated away. But if you've got $1,000 in your pocket, which can buy used to be able to buy 1,200 paddle pops. Now you can only buy 400 paddle pops, and you'll probably only be able to buy 100 paddle pops in the future. But on the other hand, you've got this currency in your pocket, which used to be able to buy, one paddle pop. Now it can buy 10,000 paddle pops. Which are you going to go for? So it's a cat out of the bag at the moment, and it's very interesting. So just my 2 cents and my thoughts on it. If we look at how the dollar is created, a lot of people sit there and say, how can I actually change crypto over for real money? Well, what is real money? What is real money? Is real money the money that's been issued you by your government and by, that you've been told to accept without, questioning, etc.? The reason why I ask that is that only 3% of money that's out there in circulation is actually printed money. The other 97% of it is just digits on a centralized ledger, right? So just think about that. You've got only 3%. If you wanted to go get your money out of the bank, there's only 3% of it out there that you can actually go and achieve. The rest of it is on a centralized ledger, which can be manipulated in extra digits. Beforehand, they used to have to get gold and silver back in the old days. You'd have to take that money, swap it for something to actually manipulate that monetary supply. You'd have to crush it down, melt it down, and mix other metals in with it, and then split the one coin into two. After that, they just printed off treasury notes, which was, like your plastic notes that we use now, and they can just print as many as they want. But now all they have to do is actually just sit there and add the extra digit and push the decimal place over another one, and you've got more money. But, a lot of people I don't think really understand that there's only 3% of money really out there in circulation, but it's on a centralized ledger. So decentralized ledger is the fact that we have, everyone, no one controls it. It can't be hacked, can't be manipulated, can't be fucked with. And, it's a free market. It's a total free market. And that's obviously why the volatility is out there. So it's very interesting to look at it from that perspective. I've talked about the velocity of Bitcoin. Obviously, if we see a hyperinflation, and if what I see possibly happening does occur, crypto could go up a lot from that. I'm just purely talking crypto in here. There's 4 vehicles of, things that I'm actually carrying through this next cycle. The 4 things are property, as always, being conservative, what I buy and all that. Cash, you might laugh at me for that. I'll explain that in a moment. Precious metals, which I always have, had, and crypto. The reason why I think cash is important in the short term is that, first and foremost, a lot of people are too highly leveraged. They've got credit cards, car loans, jet ski loans, loans to their houses for the holiday they had 6 months ago, so on and so forth. So a lot of people actually go into their house and using it as an ATM. So some people will see cash flow issues. So I think it's important to make sure that you have a good budget in place and understand your numbers and all those sorts of things. I think it's important at the time, if there was to be a crash, which I believe that if there was a button, I'd smash it and push the red alert right now, that it's a good opportunity to go and chase bargains. So, I've been buying for decades properties where people are distressed, people are going broke, etc., etc. And, I think that in a time of crisis, there will be more and more blood out there on the street, and having access to liquidity as we see a liquidity crisis. Going on out there, and I don't know if people have started realizing it or not. It's harder to obtain finance from the banks, harder to get finance for anything out there in the system. People are having less and less money. A lot of businesses that I talk to actually have their accounts receivable is quite high because people aren't able to pay them for their bills of whatever they're doing. They're buying the products or whatever they're selling. So a liquidity crisis is what this thing is going to be all about. And fixing it is putting more liquidity in the marketplace, which inevitably will see prices go up. So there's a few things to bear in mind from that perspective. Talked about how we've seen the decline of the dollar by looking at the rates since 1981. Henry Ford, interesting thing I saw the other day just on a comment in YouTube, and it's actually quite funny and ironic. But Henry Ford used to pay his workers, I'll actually see if I can get it up here on my phone while we're talking, but he was paying his workers back in like the 1920s when they started making the T-model Ford or whatever it was, at $300 a day. And a lot of people will be questioning as to how would they'd be paying $300 a day back when an average wage was worthless. Just having a look here. Here we go, yeah. In 1914, Henry Ford paid his workers $319 per day for working on his assembly line in Michigan. For a 10-hour day, that was $31.90 per hour. The workers received their entire paycheck with no deductions. There was no social security, income taxes, health insurance, workers' compensation, or union dues. How did they do this? He paid his workers $5 per day. This was equal to 0.2419 of an ounce of gold, which would equal to $319 today. The money is very, very different today than what it was in the past. If you were to look back in the past, and let's pretend we're going to Greece in Athens, and we take $20 note from today, $50 note from what we have today, or we take it back to Greece and Athens 1,000 years or 2,000 years, whenever it was, and say, can I buy something from you? They would laugh at you and say, I don't know what this is. It would be a comical thing, right? Who would take a piece of plastic from 2,000 years in the future? But if you bought someone from Greece, Athens, back 2,000 years ago to today and told them to bring $20 with them, what would they come with? They would come with an ounce of gold, because gold was worth $20 back in the day. So you could technically still use that money today, but you couldn't use your money from today back in the past. What would that buy you? You know, a lot of people look back at what gold would have bought at the turn of the last century that we're in. And gold would have bought you, an ounce of gold would have bought you like a tailor-made suit. Tailor-made suit today would be worth about $2,000. So we've looking at what that would do, it's kept its value throughout time. So when people talk about gold and silver, precious metals and stuff like that, a lot of the people that are out there promoting these things are, you know, people that have generally got a gold and silver bullion dealership or whatever like that. So just be careful on, you know, where you get your information from. But the fact is that your dollar is very different than what it used to be. I personally feel that we're going to see institutions and whatnot start using crypto, if they haven't already. I've been in talks with lots of people that are in this space, and people from Wall Street that have come out to Australia and had conversations with them, and we're pretty much sort of like days, weeks away from that happening as well. I personally think that the community out there in the crypto space will eventually make crypto more usable in a day-to-day application, and will be scaled to actually carry on, you know, faster transactions per second, and so on and so forth. Hence why I've got my shirt here, and there's one of the projects there's lots of projects out there, but I even think Bitcoin will come up to the speed with having larger block size. I think Bitcoin Cash on the 15th to 16th of May is having a scaling upgrade, which will turn from 8 meg blocks to 32 meg blocks, which will obviously, and I think that's a reflection as to why the price just went up the other week. I personally think that Bitcoin could well be the financial system killer, and that's why we're getting a lot of, you know, backlash from media, from governments around the world, etc. But the funny thing is, if we go and look at, I think it was 2013, the PBOC, the People's Bank of China, tried to outlaw Bitcoin and tried to do media campaigns, scare tactics, all that sort of stuff. It went from like $1,000 down to like $150, and they did quite a good job at it. But obviously, we've seen it go to $20,000 after that. So, you know, how big will the impact of that be? As I said, I think it's like unleashing a wild animal, and you can't get it back in the cage now, and that's, you know, essentially where we're at. Looking here, got the questions now from this week about what my thoughts are of the GFD, how to survive the upcoming GFD. I think it's important to educate yourself on monetary policies, monetary systems. Keep an eye out there in the news and see the cracks within the system yourself, see the glitches that are happening out there in the marketplace. As for a survival plan, as I said throughout this, and as I always say, as I put in the title, I'm not your financial advisor. Go and seek independent financial advice. If you do require a financial advisor that does have a brain, because a lot of them don't out there. I was actually at the pub the other week, and so some guy started a conversation, and he's a financial advisor, and told me that the reason why the government removed the $250,000 bank guarantee. So basically, we've got bail-in laws. So if there was an issue where a bank went broke, don't hold me to it exactly because I haven't read every single part of the government documentation. But if a bank was to go broke, there was a $250,000 guarantee which APRA had, which would protect. The government would pay you up to $250,000 of your money in that bank if you were to lose it and the bank was to close up. But this was removed on Valentine's Day. They were talking, or I saw all over the news about Barnaby Joyce getting laid and whatever, and having a baby to the mistress, but I never saw anything about the fact that they actually removed a very crucial part of people's protection and safety out there. So if a bank was to go broke today, there's no protection. You would become a debtor, like they would owe you the money, but you'd be in line with all the other creditors that they'll owe as well. So in essence, it's a bail-in law. This guy that was a financial advisor actually was telling me that the reason why they would do that, because he didn't believe any of the stuff that I was talking about. He said, "You've got a good argument." And I said, "I wasn't arguing, I was just telling you the fact." And he said that the reason why they would remove that is because the government is so strong and the banks are so strong and they're so confident they don't need the thing. Well, I'm so strong and I'm so confident that I'm a terrific driver, I don't remove my insurance off my car, right? You don't do it. So you've got to question. A lot of people obey without questioning. So, if this is where the financial advisors are coming in at, be very careful who you choose and all that sort of stuff. I do have access to a very good financial advisor. If you need to speak to a financial advisor, send me an email. My email address for this community is hello@bdecentralized.com. So no AU, it's just .com. hello@bdecentralized.com with an S. Send me an email and put down your email address, your phone number, whatever, and I'll forward your details over to a trusted financial advisor that I use myself. So how to survive the upcoming GFD? Personally, I would be looking at cutting back on consumerism, looking at where you can save some money, making sure your cash flow's in order, and make sure you're not leaving yourself too exposed in order to, cop a big, kick up the arse when something does go wrong. As for whether you should buy shares, sell shares, buy crypto, sell crypto, buy property, whatever, I'm not here to answer that. You need to speak to a financial advisor, but I would be focusing, and I've said it lots of times, to focus on the budget, make sure your cash flow is strong, and if you've got liquid cash that's accessible. But personally for me, I made sure that I had a large amount of cash that would be accessible. And I'm not saying accessible as in crypto, I mean physical fiat money. But yeah, I won't be holding on to that for a long period of time. I'll be spending that when I see the bargains arise out there in the marketplace. And I do believe that they will be there very shortly. Questions here. Mike's written in how to deal with hyperinflation. How to deal with hyperinflation is an interesting one because no one's really seen it. Basically, fixed goods go up in value. It's reported that back in the Great Recession, or the hyperinflation in the Weimar government back in Germany in the 1920s, that you could purchase a bottle of wine, drink it, and the next day the bottle will be worth more. The wheelbarrows full of paper notes, etc. That's hyperinflation. I don't think it'll actually get that deep, but I think it'll be somewhere in between what we're used to and somewhere in between those 2 points. Sorry, I think I've got something in mind too. As for the, I can see that we've never heard of the bail-in laws. I would suggest to look at the changes to the $250,000, Google it, changes to the $250,000 bank guarantee in the Australian, something like that. You'll find it on Google. look hard enough and you'll find it. I did post it, I think about the 20th of February on this page, somewhere around there. So it was definitely after the 14th of Feb, because when it came out, it's probably about a week after that. How to deal with hyperinflation. For me, I think holding assets, protecting yourself with having different methods of holding your assets, like as far as different asset classes and so on and so forth. That's what I am personally doing, as well as having cash, because cash becomes irrelevant. Your debt becomes irrelevant. So if someone's on $50,000 a year at the moment and their wage went to $1 million as an average wage, you'd think that'd be a lot of money. But if a Big Mac meal is $300, well, then you're going to be broke. But if, for me, with my properties, if I hold those properties and I've got a debt that I can pay off much easier now, debt becomes irrelevant with inflation. Once again, I just keep saying it over and over. I'm not your financial advisor, so just giving opinions. Take on debt and pay off with cheap currency later. This is a question from Mike. As I said, that's what I'm doing. Keeping your assets plus affording to eat during the GFD. As I said, I think it's important to, as always, which is just basic general advice, is to have a budget, take care of your cash flow position, and not to be flippant enough to think that bad things couldn't happen out there in the financial system. I've got another few questions here. Why are Ferraris better than Lambos? I like Lambos better, but it depends on what your favourite cars are. I've got a question here from Ashley. What is your percentage of money of your money is in what crypto? Look, I've got lots of cryptos. I probably have a couple of hundred different projects out there that I'm working on. I would like, for myself, I personally like investing into protocols. Protocols are strong, they'll always have a future, and I'm not a big fan of applications. From Judd here, what is the blockchain? What is the tech behind crypto, and how do you see it being used in its capacity in a real world sense? Do you see a happy medium so investors and people are happy in the governments, even if that's possible? I personally think the possibility of using crypto or blockchain in all different areas of life, it can come into the many different facets of life. It could come in from cars being able to communicate to each other, your fridge communicating to the online grocery store to say, hey, look, I haven't had milk for a few days, need some milk, and do orders for you. So there's lots of smarts behind it. I think it's the ability of actually bringing AI and real life together. I think it has the opportunity of revolutionizing mankind bigger than anything in the last 1 to 2,000 years, with its real world applications that are out there. So the biggest area of change, and I think this is why the big end of town is so scared of it, is that in the past the internet affected postal services, retail, media. If you look at all governments have been hard to stay in one term since social media came out back in 2007, 2008, because people have an opinion, they talk, whatever, and it changes the sentiment pretty quickly. I think that what blockchain and crypto really has an advantage on is being able to remove large-scale corporations, really. Going back 100 years ago, we didn't have these corporate structures, which are mega giants, which control every aspect of your life. Well, I mean every aspect of your life. Did you know that in the music industry, there's only 3 music producers out there, production companies. So you have to be approved by those companies. So everything you have in your life currently is controlled and centralized. Being able to dismantle that and people having free speech will mean that mum and dad may not have been at the table or been big enough to be at the table to make an investment into Google or Amazon or Facebook or whatever in the past. But now they have the opportunity to using the blockchain. In the past, there could have been so many projects which never got actually actioned due to the fact that, they couldn't get access to liquidity or be in the table. And it could be, there's a coin out there called Wabi, just for example, and Wabi coin going back a few years ago, there was deaths in China due to the fact that little babies were being given fraudulent sort of baby formula. And that's why there's the formula bans inside the Woolworths and stuff like that, four containers of formula per person, and they sell them off to China because they want to make sure they're getting safe product. However, there's this RFID chip which works with the Wabi network, which you can scan it and make sure that something's not fraudulent. You can make sure that if it's broken or ripped off, you go and pick up a pair of Louis Vuitton Sunnies, and you want to see if they're a knockoff. You just run your RFID chip past the an app on your phone, and you'll be able to see that it's a genuine product and it hasn't been tampered with, and you have confidence in buying that. So lots of different things that will be implemented over the course of the next decade. Voting, for example, could be done on the blockchain. The government could run on the blockchain. Interdepartments of the government could be run on the blockchain. So they can adapt it into the current life. I think we'll probably see a hybrid of certain things happening in that sense. So let's have a look here. Key movers of your position. Yeah, so don't want to go into this one too far. Maybe we can talk about some other day, and I don't want it to constitute once again as financial advice. But people could be potentially using crypto for a vehicle. Question here was key crypto percentage movers from your position for 2018 based on project timings and in the coming years, particularly if you may be trying to fast track a house deposit. I have seen people using crypto in order to fast track their housing deposit. I do see people using crypto to pay off their mortgages. I see people using crypto in many different areas as a financial instrument, but just remember, it wasn't designed as a financial instrument. It has financial strengths behind it. However, it's actually what it can do in the real world to make humanity a better place and make human beings a bit more human rather than just beings, because people are trapped in the current system. So projects that appear achievable, not ridiculous out of scope, that may bring bigger gains. Budget and Tom, if you're just joining the crypto space, what would you be focusing? So I'll read out the answer to the third one. This is for Damo. On a limited budget time, if you were just joining in the crypto space, what would you be focusing on? Personally, try and absorb as much knowledge as you can, whether it be looking on YouTube, whether it be looking on Facebook, whether it be signing up to Telegram groups, whatever. I think about 90% of what I see in the groups are just like absolute bullshit out there, but understanding, how things work. If you can understand how things work, look for the problems in those things and think of how can certain projects or certain things achieve a better result. So for me personally, I invest in all areas of crypto, from, entry levels on ICOs that are coming out, whether it be, existing projects, protocols, mining. There's a lot of stuff that I can't talk about, that I'm not at liberty to talk about, that I work on nowadays. A lot of stuff around the mining space, masternodes. There's lots of cool things out there to understand. But I think if you can understand the specifics of each different way of how crypto works and the actual matrices of it, that is a good starting place to work with. So I will be, I talked about this beforehand, I will be doing some webinars upcoming, but once again, like I do this for fun. It is a Sunday night. I am very limited on time. I do 20-hour days, so I do a lot of stuff in my life. So getting the content out to you is a little bit tough, but I will uphold my promise of having half a dozen webinars over the course of the next few weeks. Just trying to get the back end of the techie stuff happening. So, the webinar works with the landing pages and all that sort of stuff. So keep an eye out for that. Question here from Josh. Can you invest in property while in the GFD? For me, I remember when I quit my job, I worked for a corporation, big corporation, in the media beforehand. That was my job when I quit. And I remember when I finished my job, that I used to just turn up to work in order to, first of all, get paid. I was doing my job. I had everything on autopilot and all that sort of stuff. But I found that it was really good to have it as a resource cabinet. I had a scanner and a printer and a photocopier so I could sign contracts and whatnot. And it was attractive for me going to work to actually have access to those things. So, you know, in the GFC, I made a lot of wealth. If I didn't have, I had like 25 properties at the age of 25. I'm not saying that to gloat, I'm just saying it for fact. And if I hadn't have pushed through all the shit times, the market between 2003 and 2008, 2009 was really shit in Sydney. And a lot of people forget that. And looking at the efforts of what I did, I wasn't making much money. I was buying them cheap. I know I was getting bargains. People had paid more for the properties. I love when I buy something and I've seen someone pay more money for it in the past because I see that I'm getting it at a bargain. If some idiot paid something before for it, I'll probably most likely find an idiot to do that again, unless it's not like a dead horse that's no one wants to have, that's got diseases on it. You know, the markets will recover. And, you know, being able to get in there when bargains are out there, whether it be any sort of, you know, asset or whatever I'm buying, even just going to buy a car, whether I'm going to go buy furniture, I want to be getting it cheap. So when things are on sale, I like to go buy them. Question from Ryan about the government's passing bail-in laws so they can take bank deposits to stabilise the banking system. Passed it last month. Already covered that one beforehand. The other thing to notice on as well is I heard this. So do your own research. As I said, don't trust anything I say. You know, there's lots of information out there and a lot of misinformation in the marketplace. However, go do your own research. I believe I heard somewhere, you know, on our media that we hear, we see that, you know, Kim Jong-un, North Korea, I'm going to go off topic a little bit here, is a bad bloke. Kim Jong-un, you probably shouldn't talk about these things, but once again, you shouldn't be talking about money at your dinner table either. So let's just talk about things. Kim Jong-un was apparently the bad guy. Everybody hated him, etc. However, everybody's his friend now, right? And I don't care about the political stuff. I don't care about if he's a good bloke, bad bloke, whatever. But does that not seem fucking ridiculous that last week he was a terrorist and nowadays everyone's congratulating him and he's like getting shown around like a little fucking show pony? And if you go and look into the deeper parts of it, in the Korean War back in the 60s, China and North Korea did a deal which said that if China actually went to war ever, if China ever had to go to war, that North Korea would be liable to attend a war. And it's some treaty that's been passed. It gets updated every 20 years or something. It's coming up for renewal in a couple of years. But if China went to war, North Korea would be a part of that, from what I understand. Go and research it, obviously. Going back in the start of this month, actually, we saw trade wars come up on the table and lots of things happen. Going back in 2001, we saw Gaddafi and Saddam get knocked. They tried to create their own currency. They tried dealing outside of things in order to trade oil. It's never happened beforehand. They didn't succeed, obviously. But on the 26th of March, China started trading the yuan with petrol on the futures. And I believe that later on this year that they're going to actually trade physical yuan fiat for the petrol. So a trade war suddenly came out of nowhere around the time that this came out, and the global trade war is happening. I believe that, I forget exactly where I read it. I read it online. It was, if you Google it, something like $2 trillion. It was a deal done. I actually made a post on Be Decentralized page, Facebook page a while ago, which was about, it was interesting how Trump closed down the US government for a certain period of time. And that's because the government, the US Congress, they had no money to pay. So they ran out of funding. They had to go and renegotiate, to borrow some more funds to be able to pay for government services. In that period of time, they came to a brief agreement and pushed down the road, I think it's till September or something. And they had to find other ways to actually come up with the funding. On that front, I think I don't know how government works. I'm not Trump. I'm not in politics. I don't intend to. I used to be a very liberal sort of person, and today I would probably be a political atheist, looking at the spectrum, because everything's all one and the same. But from what I understand is that if Trump was having to do deals which may not be favourable, so he'd have to go to the other side of the floor, negotiate with them to get money to keep his government strong and to keep all the public services in place. He'd have to negotiate on the other side of the floor. But from what I heard is that $2 trillion worth of Australian supers, $2 trillion worth of Australian supers have been negotiated as a deal, as a financial instrument or something, over to the US. So go and do a bit of research into that. You may quite well find out, possibly, that $2 trillion worth of Australian super is going to be wrapped up as a bond or some sort of instrument to be lent to the US so they can fund their government. So that was a question that got asked in from Ryan, and I hope I answered that for you. Tanya, whatever you talk about, please explain so the people just starting out can follow you and understand to become hooked as well. I appreciate that. Nice, kind words there. I try and keep everything as basic and as simple as possible. I don't like overcomplicating things, and that's why I guess misinformation goes out there in the public arena, because it's just clouded over in a whole lot of technical jargon. Got a lot of questions here that I've sort of already covered. Adnan, the global banking system and how it would be impacted by the widespread implementation of blockchains and decentralized currency applications in general. How can the average person capitalize on this growing trend? Knowledge is power. Look, crypto is a threat to the banking system, the financial system, governments, and a lot of places around the world. So that's why you won't hear too much knowledge out there about it. But I think if you go looking and understand how money works, you might find the answers laying in that. Matt, asset protection, what advice do you give the people who are leveraged with property portfolio moving forward? If shit hits the fan, what allocations do you have in different asset classes? As I said, go and speak to a financial advisor if you need one. I know one. There's lots of shit ones out there. I don't like financial advisors, so that's why I say go and find your own ones. However, I do have access to someone that has a mindset that's very, very similar to mine, that I've known for over a decade, and that I would believe to be the best financial advisor in the country. If you do need to be put in contact, send me an email. I'll forward it on to them. They'll get in contact with you, etc. So the email for that is hello@bdecentralized.com. That's hello@bdecentralized with an s.com. No AU. Why are Hass avocados superior to the Shepherd? I don't know. We need to go and speak to some Gen Y about that. I am a Gen Y, but I don't eat that. I do eat avocado. They're pretty good, but yeah. What are the indicator signs other than a shitload of for sale signs on the streets to pinpoint to buy back in the market during the GFC period? Look, I think what we're seeing at the moment is a lot of inconsistencies out there in the marketplace. The stock markets, the derivative markets, the bond markets, the financial markets globally. A lot of the news is covered up with a lot of jargon, a lot of hints that are out there in the marketplace. I really look deep down into financial instruments to get my knowledge. So it wasn't just by chance that I thought that property was going to be a vehicle that would get me through the last decade and will continue to do so in the future. It was from understanding how monetary policies work around the world to understand how to sort of leverage those sort of assets. So, for example, I'll share something with you. Never really shared this one beforehand, but I got screwed over probably in about 2007, 2006, where interest rates were heading to double digits, and I fixed interest rates at 9%, 8.9 or something like that. And, it was a newbie thing. I had a lot of properties at the time, or I thought a lot of debt. It was like, I don't know, 10 properties or something. And I fixed this loan, and I was like, how the fuck did I get that wrong, But in essence, you're making bets with the bank by fixing interest rates. I understood that, I found out that the yield curve for the futures, the cash rate futures yield curve is a very good indication. And I've spoken about it with lots of people over the course of the last decade as to what I think could potentially happen with interest rates, just as I did to my Christmas party that I was talking about earlier in this video. Last year, I talked about interest rates potentially going up 0.25% this year, even though the market really doesn't support it. But if it doesn't, then it's going to have a bigger problem. So it's like, how do you want to pass away? Do you want to get shot, or do you want to have a car accident? Either way, it's not going to be pretty. And yeah, I've used the 30-day interbank ASX futures yield curve as an indication. I have experienced certain things with that in order to be able to, understand how things would play out in the future. Just as one of the things, I literally look at, over 100 indicators to understand what's about to happen with markets. So you can't have the boom that we've just seen from all markets. Like, it's not property, it's not crypto. People saying crypto is overvalued, people saying property is overvalued, people saying the share market's overvalued. You can't have all this growth. You can, because we've had quantitative easing, we've had more money and more liquidity coming into the marketplace. But if you're taking all the money out of the marketplace, not just stopping more money coming in, but you're actually taking out, you're going to have a reverse effect. It's common sense. So I think that brings me to the end of today. Sorry if I've been going on. I can see we've been on for an hour. This stuff really excites me. You guys ask for my help on this front, so I'd like to deliver what I can. As always, I'm not your financial advisor. None of this is financial advice. If you do need help, go find yourself help. All I want to do is just share my views, my opinions, and whatnot. Once again, as you can see on here, this site isn't a monetized site. It's not trying to sell you products and all that sort of stuff. I probably will have in the future, so don't get wrong on that front. But in the way of being able to deliver education and whatnot around these sort of topics. What if I could ask of a favor from you guys, if you could, smash up the like buttons on here and share this with your friends, put it on your own Facebook, share it around, and talk about the stuff that I'm actually delivering to you. That would be much appreciated. Thanks a lot for giving me your time and letting me be a part of your house of this evening. Catch up soon. Have a great day.